Tired of living paycheck to paycheck? Feeling the pinch of unexpected expenses? You're not alone. Many people find themselves needing a little extra financial breathing room from time to time. That's where personal loans can be a helpful option, but navigating the loan landscape can feel overwhelming. If you're considering Rocket Money for a personal loan, you're probably wondering, what's the maximum loan amount I can actually get? Let's dive deep into Rocket Money, explore their loan offerings, and uncover the factors that determine your maximum loan amount. Important note, this information is for general knowledge and educational purposes only. Loan terms and conditions can change, and individual eligibility varies. Always refer to Rocket Money's official website or contact them directly for the most up-to-date information. Introduce Rocket Money. Rocket Money is a personal finance platform that offers a range of financial tools, including bill negotiation, budgeting tools, and, importantly, personal loans. Explain Rocket Money's loan services. Rocket Money partners with a network of lenders to provide access to personal loans for various purposes, such as debt consolidation, combine multiple high-interest debts into a single, lower-interest loan for easier repayment. Home improvements, fund renovations, repairs, or upgrades to your home. Major purchases, finance large expenses like a new car, a down payment on a house, or a dream vacation. Medical expenses, cover unexpected medical costs not covered by insurance. Emergency funds, build a financial safety net to handle unforeseen circumstances. Unfortunately, there's no single, universal maximum loan amount with Rocket Money. Here's why. Lender-specific limits. Rocket Money acts as a platform connecting you with various lenders. Each lender has its own set of lending criteria and maximum loan amounts. These limits can vary significantly based on factors like credit score. Higher credit scores generally qualify for larger loan amounts and lower interest rates. Credit history. A longer credit history with responsible borrowing behavior is usually favored. Income and employment. Consistent income and stable employment are crucial for loan approval and determine the loan amount. Debt-to-income ratio. DTI lenders assess your existing debt obligations to determine how much you can comfortably repay. A lower DTI generally improves your chances of qualifying for a larger loan. Loan purpose. The purpose of the loan can also influence the maximum amount. Some lenders may have specific loan programs with varying limits for different purposes, e.g., home improvement loans versus debt consolidation loans. How to find out your potential loan amount. Create a Rocket Money account. If you don't have one already, sign up for a free Rocket Money account. Check your pre-qualification. Rocket Money offers a pre-qualification process. This involves a soft credit check that won't impact your credit score. The pre-qualification will give you an idea of the potential loan amounts and interest rates you may qualify for from their network of lenders. Compare loan offers. Once pre-qualified, you can compare loan offers from different lenders within the Rocket Money platform. This allows you to choose the loan that best suits your financial needs and goals. Let's delve deeper into the key factors that lenders consider when determining your maximum loan amount. Credit score. Your credit score is arguably the most significant factor. A higher credit score generally translates to higher loan amounts. Lenders perceive you as a lower-risk borrower, allowing them to offer larger loans. Lower interest rates. Lower interest rates mean lower monthly payments and less overall interest paid over the loan term. Credit history. A longer credit history with a responsible borrowing record, on-time payments, low credit utilization, demonstrates your creditworthiness to lenders. Income and employment. Stable income and employment are essential to demonstrate your ability to repay the loan. Lenders will typically consider your income, employment history, and employment type. Debt-to-income ratio. DTI. Your DTI is the ratio of your monthly debt payments, including credit cards, student loans, etc., to your monthly gross income. A lower DTI indicates you have more available income to service new debt. Loan purpose. As mentioned earlier, the purpose of the loan can influence the maximum amount. Some lenders may have specific loan programs with varying limits for different purposes. Tips to improve your loan eligibility and increase your potential loan amount. Improve your credit score. Pay bills on time. Consistent on-time payments are crucial for building a positive credit history. Keep credit utilization low. Maintain low credit card balances relative to your credit limits. Check your credit report. Regularly review your credit report for any errors or inaccuracies and dispute them if necessary. Reduce your debt. Pay down existing debts, such as credit card balances or personal loans, to lower your DTI. Increase your income. Explore ways to increase your income, such as asking for a raise, taking on a side hustle, or finding a higher-paying job. Build a strong credit history. Open and maintain credit accounts. Open and maintain credit accounts responsibly, e.g., credit cards, installment loans. Become an authorized user. Ask a trusted friend or family member with excellent credit to add you as an authorized user on their credit card account. Consider a credit builder loan. A credit builder loan can help you establish or rebuild credit by gradually increasing your credit limit as you make on-time payments. Important considerations. Interest rates. While the maximum loan amount is important, it's crucial to pay attention to the interest rate. A lower interest rate can save you significant money over the life of the loan. Loan term. The loan term also impacts your monthly payments and the total amount of interest you'll pay. Choose a loan term that fits your budget and financial goals. Repayment plan. Carefully review the repayment plan and ensure you can comfortably afford the monthly payments. Hidden fees. Be aware of any hidden fees, such as origination fees, late fees, or prepayment penalties. Customer service. Choose a lender with excellent customer service in case you have any questions or encounter any issues. Remember, borrowing money is a serious financial decision. Always borrow responsibly and only borrow what you can comfortably afford to repay. With that said, thanks for watching and until next time.